What's going on, guys? Welcome to yet another video from SWAT Suite Education. On this channel, we focus mostly on education for like finance and specifically options trading as well. I have been on an absolute tear, just posting a lot of options trading videos. So today, yet again, as you can tell from the title, we will be talking about one of the basic core fundamental things that you guys should know when you are approaching options trading. So before we get into this video, if you are not yet subscribed, I hope that I will earn your subscription throughout this video. And I hope that I earn your thumbs up as well. So before we get into it, today we're going to be talking about candlesticks, and I'm going to be teaching you guys the exact step-by-step ways to read candlesticks and then putting that together at the end with price action, what I have found to help me get into better moves and everything like that. So it's going to be pretty straightforward, to the point, right? So I don't know which one you guys like, but I basically went on Google, searched in candlestick patterns. You guys will see this exact thing pop up, and I kind of like this right here. So I'm gonna open this. Um, so as you guys can see, um, okay, I don't know who this is. Incredible charts. Shouts out to y'all. Incredible charts. But we're just basically going to be explaining this, right? I guess I could read this, right? And it gives pretty much good information on it. So it says the the Japanese have used candlestick charts to analyze prices since the 17th century. In this Japanese candlestick charting techniques. Okay, this is talking about the books, but this is a Japanese candlestick. That's what these are referred to as. And all you guys need to know is these are candlesticks, right? And all you guys need to know is how they move and what they look like and what they do. So these, some terminologies that you guys would need to know are body, which is everything colored in green, everything colored in red is body. And then these black lines on the top and bottom are wicks. So all you guys need to know is candlestick body and candlestick wicks. Now, depending on how these wicks look and how the body looks, gives you a different interpretation when you put it all together when you're reading price action. And then the next thing that you guys would need to know is how they open and close. So basically, the candlesticks, they open and close based off of momentum, based off of news reaction, based off of any, like, there's always like the catalyst. Either there's demand in that area that's going to move. If there's supply in that area, it's going to move down. If there is, if you're at a key level, it may shoot up, it may shoot down based off of. So that these are how candlesticks fluctuate based off of numerous different things, and also how you and I trade, how different algorithms are trading, how hedge funds are trading, and liquidity, who's putting money, stuff like that into the market. So that's how these candlesticks are, like that's how they move, right? And how they are created are basically the green candlesticks. You just have to remember this because it took me a while at the beginning to. The green candlesticks, they open low and they close high, right? So it's like thumbs up, thumbs go up, right? And how do your thumbs down, thumbs go down, right? So thumbs up, the green candlesticks, they open at the lowest point and then they close at the top, right? So that's how they move. So now for the green candlesticks, it's basically moving in an upward trajectory, right? And then so the only thing that you have to kind of get used to is looking at how the wicks, candle body wicks form, right? If it's a green candle, that means it started somewhere low and it moved somewhere high. The the wicks are showing you where price has been before in the past, right? So this green is basically showing you that it started here, right? Price has been as low as here before in the past. It's shot up, went as high as here, but then it closed down here. It still formed a green candle because it opened low and it closed high, right? So it went up and closed down, and then you see it created a wick because if it was to close up here, there would be no wick. It would just be a candle body and then a wick on the bottom. But since it came back down, it closed here, if that makes sense, guys. Same thing with the red, which is a bearish candlestick, but in reverse, right? So thumbs down, it opened up here, it went as high as here, came crashing down, and then it closed up here, right? So that those are the two differences between a bullish and a bearish candlestick. Um, and bulls and bears are basically the analogy behind price movement. When price is moving up, you call it bullish because bulls they have their horns and they strike up, and then bears they have their paws which they're striking down. Um, and then some terminology that a lot of people don't know are hogs and sheeps. Sheeps are those people who kind of take signals from everyone. They don't really know what they're doing, so they take signals for anyone. This is just a tip. And then hogs are people who are, they get greedy and they don't know how to exit their trades and stuff like that. And hogs usually get slaughtered. I can give more information on different places, but that's just some stuff for you guys to know. Um, and yeah, there these candlesticks can be really any color, as long as you can tell the difference between. I have mine, which is green and yellow, just because I feel like in my mind red is a little bit too harsh, but I can still read it the same. Um, and yeah, so it's explaining shadows. That's another term, shadows and tails. So these wicks are also referred as shadows and tails. This is a tail or shadow or a wick. This is a tail, shadow, wick. Um, and yeah, that's basically all you guys need to know when starting out. The next thing that you guys would need to know is about dojis. Dojis just show indecision. It's basically saying that price didn't know what it wanted to do. It moved up, it moved down, and it came back to the same exact place, right? Um, so that's what this is. It has no body. No body is a doji, right? It has no candlestick body. So it's a candlestick doji. And this shows indecision because price moved up here, it came back down, and then it came back to close right exactly where it opened. Here it's saying that price did not move at all. It just stayed the same. It didn't move up or down, just stayed the same. Here, same doji. They have different names. You guys can pretty much understand the names based off of what it's looking like, right? Long legged doji, short legged doji, called just a regular doji or short legged doji, four price doji. You guys can visually see. You don't have to really remember these terms as long as you remember doji, you remember wick, you remember candlestick body. Dragonfly doji is something that you guys don't really have to remember, but you have to be able to identify these. Um, Dragonfly, it's a dragonfly because it has this long wick and a open and closed price at the top or near the top. This one is just near the top, um, and it kind of looks like a dragonfly, right? So that's what a dragonfly uh, doji is. And all of these are, it says candlestick reversal signals. So all of these basically give you different context clues as to where price is going to move and how price is going to move, right? Um, this is another, these are going into patterns now, showing you engulfing patterns, harami. These are a little bit more advanced, but I just wanted to go over in this video the basics um, of what you guys should know. Now, let me go back and kind of put everything together before I close out on this video. So this, for example, is a great indication. Let me go back. I guess you guys can probably see this like this. This is a good indication showing you how price kind of moves and all together, right? You see the doji right here. I mean, I said doji. You see the wick right here, which showing you that this red candle moved all the way down here, but then it came back up. And on the next move, it continued moving up, but then the bears pushed price back down. Then on the next move, it came down, continued moving up, but then the bears moved price back down. But all together, it's showing an up movement, show the up movement. So what is it saying? Preferably calls are bulls are in favor, right? Whereas to this side, bears were coming in. So all of this basically shows you exactly how price moves, and that's a slight overview on candlestick patterns, candlestick chart, and just candlesticks in general. All right. If this video was of any value, leave a comment. What what did this video specifically help you with, and how was it different? Because I know there's a lot of these same types of videos on YouTube, but I feel like everybody explains things differently. So hopefully this helps. What nuances that you guys get from it. Make sure you subscribe to the channel for more educational videos, specifically with options trading and whatnot. And also share this video with a friend that may need help with something if you and your friend are kind of learning this. And just stay tuned, subscribe, stay tuned for the next videos because we'll be dropping more videos just talking about education and um, these type of things. So um, yeah, hope I earned your subscription. Make sure you stay tuned, and I'll see you guys in the next video. Peace out.